Let's get to the next speaker, Barry Burns. Barry is another expert in the market field, has a very interesting backstory. He's actually been trading since I think he was a little boy. So his dad taught him how to trade. And he's basically has read over 100 books on trading and spent lots of money on investment analysis and trading courses and education. Has a very unique market look. And so what I'm going to do now is I'm going to go ahead and bring Barry on the line. So Barry, let's go ahead and have you turn on your microphone, and let's hope that it works okay this time. Hey, I can hear you, Barry.
Yes, I am here.
Yes! Good. That's good to see. I can see your screen. Your desktop looks more cluttered than mine.
Yeah, it's pretty cluttered, but there we go. I think you should be able to just see my slide now.
I can. It looks like an important disclaimer to me.
Well, golly, it is. How did you know that? It is a very important disclaimer. Thank you, Jeff.
We're running a little bit slow, so I'm gonna get out of the way. I'm gonna let you go.
Okay, great, no problem. Yeah, well, I'll tell you, the candlestick stuff is fantastic. Steve is fantastic. I know him. I've worked with him in the past, and his materials are amazing. So I just wanted to say that too, because of my knowledge of what he does and what he shares, and highly recommend what he does as well. So yes, I like to say this before all of my presentations. Everybody, thank you very much for having me, MetaStock and Stocks and Commodities Magazine. I subscribe to that magazine myself, by the way, and get no gift subscriptions or courtesy subscriptions. I pay for it out of my own wallet, and it's because I want to. It's a tremendous, tremendous magazine. I've been a subscriber for, oh my gosh, as long as I can remember, years and years and years and years. Look forward to it every single month. Read it from cover to back, and it's just, to me, it's the best magazine on trading out there, and it's absolutely fantastic. So I appreciate their sponsorship. Appreciate MetaStock. MetaStock, by the way, was the very first trading platform I ever used, and that's because, again, they're the best, you know, and it was a mentor of mine who got me started with it, and I've been with it ever since. And you know, it's just, again, one of those things I've been with for decades, although it's improved, continues to improve all the time, and it's just unbelievable. You know, it's what professionals use. So if you want to be a professional trader, this is the place to be. So, and then we've all developed our own little methodologies around it, and I'm going to share with you some of mine today. And welcome everybody and you're at a good place here. You've got a tremendous lineup of speakers here at the summit, and I'm very excited. So, but let's be very, very clear that trading is not suitable for all people. Some markets are leveraged, therefore it's possible to lose all your money, and even possible to get into debt in certain situations. Hopefully your brokers got you covered there, they usually do. But when you're using leverage, you've got to be extremely, extremely careful. Please only use money that you can afford to lose. We call that discretionary money. Don't use money in trading that you need to pay for your house payment, car payment, retirement, kids' college education, that sort of thing. Put together a financial plan, you know, with a qualified financial planner, and incorporate your trading into that particular plan. Don't get crazy with trading. It is very, very risky. All information in my presentation is for educational purposes only. It should not be taken as investment advice, and I'm not going to give any specific recommendations or endorsements to buy or sell specific instruments, markets, stocks, etc. So please use this information at your own risk, and it's only for general purposes, and we assume no responsibility for liability or errors or omissions or anything else. So there, I just made my lawyer a very, very happy person. And of course, our lawyers are the most important people in our lives, and if we keep them happy, then we'll be happy. So there you go. So in all seriousness, all that stuff I said, very, very important. I find that even though we read these legal disclaimers, you know, and software and brokerage forms and all this kind of stuff, sometimes we see it so often that we just bypass it. And it's really important not to bypass it. These things are there because of other people's bad experiences. So learn from their bad experiences, and Please do not assume the kind of risk that is not necessary to assume. Now, what I'd like to do is I've got a great presentation for you here today. It's going to be very, very helpful, very practical. I've got some practical things that you can start using in your trading right away, and a lot of good free stuff to share with you that you can incorporate into your current trading methodology. But even though I'm using a PowerPoint presentation, and obviously I can't change the slides, I can customize this presentation for you all. And no, I'm not from the South. I'm actually from Detroit, Michigan, so ironic that I've incorporated y'all into my vocabulary, but I've lived all over the country, so I guess I picked up a little here and a little there. In order for me to customize the presentation for you, I'd like to ask you this question, and you see it on the slide. What are your most common trading problems, struggles, or frustrations? Go ahead and, that's not a rhetorical question, I really like to know that. Go ahead and type that into the question box. And here's how that will help me customize the presentation. And I see people are answering it already, that's great. So the way you answer this will help me determine how much time to spend on certain topics. So if a lot of you say you have a certain problem, and I come across a slide that addresses that problem, I'll slow down and I'll spend more time on that topic and on that slide. On the other hand, if I pull up a slide that covers a topic that not many of you have said is a problem, or none of you have said is a problem, I'll either go through that slide real quickly, or heck, I might even just skip the slide so we can get to the stuff that, that you need help with. All right, so let's see what we got here. Oh, we got a lot. Wow, you guys are very, very, man, we got a lot of people here today. Yeah, you guys are very responsive. I appreciate that. I love that. So got so many answers coming in, I'm not going to be able to address them all. Wow, this is fantastic. I love it. I love it when audiences are very responsive like this. Okay, so I'll read some of them, and we're going to have a lot of repeating answers, I'm sure, so let me read the ones that are kind of the most common. Sideways market and retracement, says Daniel. Robert says premature entry. Ed says taking profits. Maj says discipline. Nabila says entry and exit, entry, frustration. Day trader, still a student, always looking to improve, says TZ. Okay. Let's see here. Wow, they're coming in fast and furious, so I gotta change my scaling here of my question box. Okay, so finding entry points, buying options at the right price, good one. Using your real-time strategy, or using your trade strategy in real time. Okay, exits. So we got exits, entries, taking profits too early. That's an important one. Khalid, right? Stan, how to keep profits, a lot of entries, a lot of exits, finding suitable trades, Sheldon says. Okay, there's a new one. Mickey, not enough capital. Okay. Trade direction, Johan, good. So a lot of stuff about getting in, getting out, where to get in, when to get in. That's awesome, because that's exactly what I'm going to be sharing with you today. You guys are at the right place. I'm going to show you a way to pinpoint the timing of your entries and your exits. So you are at the right place. If you want to know when to get in, that's what we're going to address today in my presentation. Trailing stops, a lot about discipline, consistency, good. System to adhere to, good. Cash, absolutely. You need to have a method or a system that is very objective, rule-based, and that brings clarity to your trading. Yep, we got that for you today. Nancy talks about finding the stock to enter and knowing when to get out. Absolutely. Sarah, stops, good. When to hold, fold. I like it, Pat. Gene, lack of confidence. Okay. Yep. You know what brings confidence? Making money. Isn't that funny? Making money gives you confidence. So yes, it's amazing how having a methodology that actually makes money creates confidence, helps you with a lot of psychological problems. You know, people go on and on and on about the trading psychology. I'll tell you, the only thing I've had help me with trading psychology is making money. All of a sudden, then all those psychological problems just kind of go away. It's amazing. And okay, exiting at positions at a loss. Okay, a lot about entries and exits. Again, too early on reversal. Wow, a lot of answers here. I'm going to try to find some unique ones because those are the common ones. Pulling the trigger. Okay, Karen, good. Oh, Robert. Oh, I love Robert's answer. Executing too many trades per day. Thank you, Robert. You know what? I would say in working with traders, that's the #1 problem traders have is over trading. And I'll even confess to you, that was my #1 problem, was over trading. Once I conquered that, I started being consistently profitable. And I actually had a friend of mine who's a professional trader help me with that. So I can totally, and there's a lot of people who are not aware of that, that's their problem. Good for you, Robert, that you're aware. It starts with awareness. Good. I like John's answer. Too many people with magic, in quotes, solutions. Yes. And you know what? Thank you. Again, that's a great, great comment. There are no magic solutions. There's no holy grail to trading. Trading is a profession. And the key to trading is putting together a methodology that gives you a probability scenario, gives you an edge. And you'll have wins, you'll have losses. We never avoid losses. The key is to keep them small, as you know, and keep your winners big. But there's no magic indicator, there's no magic anything. So good for you, my friend. You understand that. And let me say this too. The key to trading is to treat it as a profession like any other profession, because there's a lot of money that can be made here. Most people don't make money, but there's people who do, and the people who do are you know, it attracts the best of the best because there is so much money to be made. Therefore, you're up against the best of the best. That means you better become the best of the best. So, you know, there's no little Forex robot or $2 ebook that's going to make you a millionaire. Treat it like a profession, get a great education, get the best trading platform, and, you know, and then spend a lot of time on the education, study hard, and focus. Okay, so we're spending a little more time on this than I want, so I'm just going to see if there's any more that, oh, wow, yeah, okay. Here's one, Foster. My problem is that when I am in a winning trade, I tend to open larger trades to gain, but instead, suddenly the market turns, and guess what? I lose. I have to learn that issue. Yes, awesome. I like you guys. You guys are coming up with some really good ones. What I'm seeing here is you guys have good self-awareness, and that's where it all starts. So when you're in a winning trade, understand professionals get in early and losers get in late. That's a general rule. Anything, whether it's trend, momentum, wave counts, anything, you want to get in early. This is why I don't tend to add to winning trades, because the longer the trade goes on, the less likely it is to continue. I like to get in a little earlier than the amateurs, than the retailers, and just about, you know, because when you get a lot of confirmation on a trade, that's when it's obvious. And when anything's obvious, it's done. It's over. Does that make sense to you guys? You got to get in. In fact, back in the days of yore, I've been trading for 49 years. My dad was a stock trader. He started teaching me when I was 8 years old. And back then, we called it speculation. We didn't call it trading. And if you ever read about Jesse Livermore, great guy to study, Jesse Livermore. Back in his days, they called it speculation, and I still prefer that term. Maybe it's because I'm old-fashioned, but I like the word because it tells us what we're doing. We're speculating. There's no certainties in trading. We're speculating, and that gives you that inherent sense of risk. So, yeah, we take risky positions. We open early, and I like to go full in, and then I like to get out piecemeal by piecemeal. By the time everything's confirmed and obvious, I'm out. Because by the time everything's confirmed and obvious, that's when the retailers jump in. Done. Too late, my friends, too late. Okay, so spent a little more time on that than I wanted, but you guys gave such great answers that I'm actually impressed. This is a great audience. Well, I've done this survey, by the way, asking this question for quite a few years. I've asked tens of thousands of traders this, and here are the top 5 answers that came in. Let me ask if you can relate to these. People would say, well, number one, I entered the market. Okay, so let's say they buy. Then right after the buy, it seems like, bam, I get stopped out all the time. Then let's say, and then after I get stopped out, then the market turns around and goes back in the original direction of my trade. Now, can anyone relate to that, where it seems like you get in and there's a trend and it all looks good, but as soon as you get in, boom, the market turns against you? I've had people even tell me, it's like, Barry, I'm like a perfectly horrible trader. I'm so great at being wrong, it's uncanny. It's ridiculously how perfect I am. Ridiculously? No, it's ridiculous how perfect I am at being wrong. Anybody? Oh, okay, yep, the answers are coming in. Everybody's like, yep, sounds like me. Yep, it happens all the time. I lose like that. Yeah. And that's typical. That's typical. That's what I'm talking about. By the time everything's obvious, it's done. The deal is done. Here's another one, getting out of big moves too soon, and so not making the huge profits. And I know a lot of you guys can relate to that because you already put that in the answer box. Getting stopped out too often. In fact, today I'm going to show you how not to get stopped out so often. Okay, so I'm going to show you a solution to that. Not knowing the best place to exit the market. All right. Trading a trend that doesn't follow through. So all of you who put anything about direction, which side of the market to be on, that one applies to you, trend. So those are the top 5. By the way, number 6, I just happened to remember. Number 6 was information overload. Anybody here have information overload? Like there's way too much information. I just get overwhelmed by the amount of information that there is. So James says, me, Jimmy, Roberta, Wim, Bernard, John. Okay, yeah, everybody. Okay. Too many indicators, too many gurus to follow, right, Al, Rel, right, Cynthia? Yeah, exactly. You can't do that. When I went to Chicago, by the way, one of my mentors was a floor trader at the CME, and I got an apartment out there and worked with him for a while. And you know what was crazy? I was already doing pretty good at trading by that time. I wasn't going to learn how to make money. I was going to learn how to make more money. And when I went out there, I was actually proud of my trading method. I thought I was all that. I thought it was really amazing. In fact, I even went thinking he's going to be impressed with what I do because it's so darn sophisticated, and he's going to be like, wow, Barry, you're incredible. You're the best trader I've ever come across. You're so intelligent. And then when I looked at what he was doing, it was so ridiculously simple. By the way, this guy was making over $1 million a year trading. He was the #1 trader for their trading floor of the company that I was going to work with at that time. And his trading was so simple, it was embarrassing how simple it was. But he was making more money than I was with my highfalutin sophisticated trading methodology. So I got humbled. I no longer was thinking I was going to impress him. And I came back and I took a lot of stuff off my charts, and now my trading is brain dead simple. All I look at is 5 things. What you have to do in trading is you have to pick an area, a niche, because there is so much information. You can get overwhelmed. You can't look at it all. It's impossible. There's too much. So you pick your little area and you look for an area to exploit, if you will. And someone asked, what's the difference between gambling and trade and speculation or trading? The difference is that in gambling, the odds are against you. You will always lose over a large sample of data. In trading, we can be more like the house than the gambler. You realize casinos aren't gambling, right? It's the people who come to Vegas who gamble. But the casinos aren't gambling. No, they have an edge set in, and over a large number of, pulls of the handle on the one-eyed bandit or whatever, they're going to win. They always win over a large sample of data. So they're not gambling. In trading, that's the same thing. If you have a good trading methodology with a positive expectancy, you're not gambling. You will come out ahead over a large sample of data because you have an edge. Okay, that's the difference. Great question, by the way. Great question. So how do we get this edge? All right, here we go. Here's my trading methodology. I told you it's simple. I'm going to share it with you right now. I told you I'm going to look at 5 things. Everything else I ignore. I don't care what the talking heads are saying on TV. I don't care what the analysts are saying. I ignore all that. Talk is cheap. Money. I follow the money. And that's what it's all about. So my trading, I call it not a system, but a methodology because it's very methodical, very rule-based, very very cut and dry. Okay, it's black and white. And what I'm doing, the whole thing is about measuring the energies in the market. And when I talk about the energies, I'm talking about the energy of money. Money. So when we talk about what is going on in the market, all that matters is not anyone's opinion. I don't even give a mouse's left patootie about the bids and the asks in the market anymore, right? The days of the Sos Bandit, gone. I sat next to a big, huge S&P trader, watched him trade. Well, he let me watch him trade, right? I paid him 5 figures, and so he gave me the privilege of sitting there and watch him trade. And this guy would put in 100 lots like it was pennies at the bid, at the ask. And then as soon as it got close to being filled, he would pull it. And I saw him do it over and over and over again. That's called gaming the market. And I learned a big lesson that day, and that was that I can't trust the bids and the asks. So what I trust is when people actually invest their money. That's what they care about. If they put their money in the market, and I'm talking about the big money, I'm talking about the whales, they're committing. Put your money where your mouth is. I don't care what comes out of your mouth unless it's money. And it's not the retailers, it's the professionals. We're following the professional commitments. Now, we do that in 5 ways. I break that down into 5 ways. So when money comes into the market, what side is it coming in, on the buy or the sell? So that's trend, direction. That's the first thing I always look at is direction. And that's a very logical thing to look at first. Why? Because, well, I want to know which side of the market I'm looking to take a trade on, the long side or the short side. So that's it. Step 1, and by the way, my trading is a 5-step method, and it's always in this order, which keeps my mind orderly, so I don't get that sense of overwhelm. After I look at that, then I go to number 2. Now, let me ask you this. How many of you, when you take a trade, ask yourself, I'm sure most of you, well, probably everybody is asking about the trend, right? Because you at least are making some decision about direction, which is trend. Okay, so everybody looks at that. You've got to know whether you're going to be on the buy side or the sell side, the bullish or the bearish. Now, how many of you ask yourself before you take a trade, is this a strong trend or a weak trend? Go ahead and be honest and type into the question box. Let's see what you got. Do you ask yourself on every single trade, is this a strong trend or a weak trend? So we got mixed answers, of course, which is normal, but no, no, yes, not asking, yes, nope, no way, no, no, Sven. Yes, do not know, no, yes, says not often, but not always. Okay. Okay, haven't never thought about that, says Monica. Okay, there you go. Terry, no, but should. Of course not, says Cynthia. Haven't considered it, says Ed. Okay, so most people are saying no. There's some yeses. And John says yes, but not very well. Okay, so that actually brings up a good point, John. So most of you say no. That's a big problem. And that I'm actually glad to hear you say that, because that means you got some, I'm going to share something new with you today. And John brings up the point, yes, but not very well. To me, that is a good distinction, because it says, well, yes, but maybe I don't know how to do it, or not quite clear on how to do that. And that's important as well. So here's the issue. When you get into the market, if you buy, and then the market turns against you right after you get in, that problem right there, that's the problem. It's because you haven't been taught, and it's not your fault, it's just that nobody has taught you yet how to distinguish whether a trend is strong or weak. Well, it's pretty self-evident, I think, that if you get into a trend and it's strong, it's likely to continue after you get in. And we're not technical analysts. You know, the term technical analysis, it's fine, but it kind of indicates that you're analyzing the market, which we are, but that's a historical analysis. As traders, for us, we're trying to do more than just analyze what has been happening in the market. We're trying to determine what's going to happen in the future, what's going to happen after you get in. That's the important thing. Momentum helps you with that. Momentum helps you determine what's going to happen after you get in, which is what trading's all about. Will this market continue to go in the direction of the trend? See, trend is always, by definition, a lagging indicator. Always. Momentum, on the other hand, is a potential, so it's not always, but is a potential leading indicator by its nature. Here's what I mean by that. So, and by the way, by its nature, so let's talk about the nature of momentum. Imagine a train going down the tracks, okay? And let's say that train is going 30 miles an hour and had, no, 60 miles an hour, sorry, 60 miles an hour and has 30 cars behind it. Now, that train has momentum. If the brakes are applied, will that train stop on a dime? Will it stop in a millimeter, centimeter? Will it stop in a yard, a meter? You know, got to cater to our European friends here too and use the metric system. Okay, I just happen to know, because I saw this on the Discovery Channel, that a train going 30 miles an hour with, I'm sorry, 60 miles an hour, I keep getting that backwards, 60 miles an hour with 30 cars behind it, if the brakes are applied, it will take it a mile to stop. A mile. Why? The nature of momentum. It can't stop right away. It's going to take a while. So apply that to the markets, and a market moving up with great momentum behind it, even if the brakes are applied, momentum starts to come out of the market, it still will continue in the direction of its trend and put in another higher high after you get in. Now think of the benefit of that. If you get a trend with momentum, and you've asked yourself, is this a strong trend? And the answer is, yeah, there's momentum behind it. And you get in, even if that momentum starts to come out. Market makes another higher high after you get in. You can, boom, lock in some profits, take some money, take some green, put it in your pocket, put it in your purse, move your stop to break even. You're golden. You're golden now. That's how important the energy of momentum is. Pretty dang important, right? So you should know, you should be asking yourself on every single trade, does this market have momentum behind it when I'm taking this trade? If it does, I'm good. If it doesn't, I will not take this trade, regardless of the trend. You know, trend traders, people who trade trend, pure trend traders, do you understand that even the professionals, I'm talking about the ones who do make money with it, it's very common for the win-loss ratio to be below 50%. Very common. It's the norm. For me, I don't like that. I can't deal with that. That doesn't work with my brain cells. Okay, I need a higher than 50-50 win-loss ratio for me to be mentally comfortable. So I add the energy of momentum to get it up over 50-50. Now, energy number 3 that I look at, so if we got a trend and it's strong, then I'm still interested in the trade. Remember, this is a little checklist we're going through. This is my trading method, very simple. But I'm still not done. Then I go to energy number 3. Cycles. Now, cycles tells you when to get in. Okay? Let's ask another question. How many of you, and again, don't be shy about saying, no, I don't do this. It means you're going to learn something today. It means it's actually helping you to say, oh, okay, I see what I need to learn. And that's a fantastic thing. So, you know, in fact, it's a victory for you. So how many of you, before you get into a trade, ask yourself about the x-axis? Now, what do I mean by the x-axis? There's 2 axes on the chart, right? A chart is a 2-dimensional object. You got the y-axis, which is price. Oh, you know what? Let me draw this here a little bit, because that's a little bit of a tongue twister. What do we got here? We got green today. Okay. So here's a chart. The y-axis is this one. This is what? Price, right? Down here, what do we have? Time. Before you get into a trade, how many of you evaluate if it's the right time to enter the trade. How many of you have been taught, again, not your fault if you haven't, it's just no one's taught you, how many people have learned, how many people have been taught how to evaluate the time axis? Either yes or no. So, no, yes, no, 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 no. No, okay, so most, a little bit, I don't open trades depending on time, certain times of the day. I think yes, but not sure. Well, if you're not sure, then you don't know. Okay, that's all right though. All right, so very good. Okay, so some people are saying, you know, well, kind of, or maybe, but I'm not certain. And a lot of people, most people are saying no. Diane says yes from you. Oh, well, thank you, Diane. Okay, that's great. Okay, very important. Why is this so important? Two things. Number one, we talked about the difference between gambling and trading, right? If the chart's a two-dimensional object, which it is, and you don't know how to trade time, you're missing out on 50% of the information on a chart. How in the world can you establish a probability scenario that favors you if you're not evaluating time, half the information on the chart? You're leaving out 50% of the info. You can't have a probability scenario when you ignore 50% of the information on the chart. So there you go. That's number one. Number two, famous trader W.D. Gann. He always talked about the confluence of time and price, which I do as well. But he said between the two, even though there's only two axes on the chart, time is actually more important than price. It has more weight in your decision. So big problem. All right, so we're going to talk about that today. Let's help to hopefully get you on the right path. So then, let's see, there we go. Then the fourth thing I look at is, oh, let me do one more thing about time. Let me show you exactly why time is so important. Let me bring a little more clarity to that, okay? So let's say that I brought in the support resistance a little sooner. Here's what happens with time. Okay, we get a higher high, higher low, higher high, higher low. Then you say, okay, I'm going to buy here, put my stop below here. And then the market goes down. You get in here, okay? Market goes up enough to fill you. Then it comes down, stops you out, and then turns right around and goes to the moon, Alice. So this is what one of my mentors called getting in at the right, having the right trade but at the wrong time. The right trade at the wrong time. You got in at the right direction but at the wrong time. You got in at this time when this was the optimal time. So he said retailers are often right but at the wrong time. This, by the way, is just a very common pattern. This is not an unusual pattern, just simply called an ABC complex retrace, and you've probably heard of these. Okay? So today I'm going to give you some very specific information on how to get in at the right time. And it's actually pretty simple. Okay, so that's the third thing that I ask myself. So then I go to number 4, support resistance. Very common thing. People buy off of support, short off of resistance, use them for profit targets. Cycles and support resistance, that's the confluence of time and price. Okay, so we look for the right time at a support level, at a resistance level. And then the fifth energy I look for is the fractal energy, and that simply means using multiple time frames. So if I'm looking for setups on a daily chart, I'll also look at a weekly chart, and then I trade in the direction of the weekly chart. But here's the caveat. I don't trade in the direction of trend of the longer time frame. I trade in the direction of momentum of the longer time frame. And that's where I'm a little different than a lot of other traders. And fortunately, MetaStock is fantastic at that because you can use the Explorer and you can do scans like on a daily chart, and then you can filter it through a weekly scan after that, which is amazing. So it works really great with my method. And works great for day trading too. So we use these 5 energies. That's all I look at, okay? Those 5 things, that's it. So I'm very focused. I don't get information overwhelmed. Now, how do we take that information and make money? Making money in trading is all about determining a probability scenario where the odds are on our sides over a large sample of data. So here's how I do it. I take that information and I ask myself at each potential entry point, how many of those 5 energies are aligned, saying buy or sell. I give each setup a score of 1 to 5 based on that. Obviously, the higher the score, the higher I consider the probability of success. I liken this to taking each trade to court. We need 5 independent witnesses to establish a preponderance of the evidence. So it's not about just putting 5 indicators on your chart. You could put 5 trend indicators on a chart and they could all be bullish. That means nothing because they're all measuring trend. And trend is only one energy. It's not about the indicators, it's about the actual money flow in the market, right? The energy of the money flow in the market. So these 5 energies that I just told you about, here's the key. Here's why they work, and here's why I chose them. Each one of these is non-correlated to the other 4. And that's the strategic advantage. That's why when all 5 align, since they're non-correlated to each other, that gives you a probability scenario. All right, so let me show you a chart here and show you what we're talking about. Here's basically how it looks. It is almost embarrassingly simple. Okay, and you know, like I said, my friend in Chicago, my mentor in Chicago, you know, this is the kind of stuff that, I mean, this is not his method, but his was pretty much this simple too. So, and here's what it looks like with MetaStock. We have a plugin for MetaStock that gives you all this stuff, makes it really easy. So we have a trend. Here's our checklist. It's just a 5-point checklist. That's it. Okay. So we start with trend. What direction do we want to be in? Okay. So here is our trend line. And MetaStock also creates a trend pattern down here. But this is our trend line, and we got a 10-minute chart on the left and a 30-minute chart on the right. So you can do this for day trading, swing trading, investing, whatever. You just change your time frames. So this trend line is angling up, therefore we're in a trend. Now, we also count waves. Why do we count waves? Because we want to know, are we early in a new trend or late in an old trend, right? And this is what we talked about earlier. We don't want to get in late when everything is totally obvious and confirmed, because that's when it's about to stop. So you want to get early into a new trend, and we determine early or late in trends by counting waves. These, by the way, are not Elliott waves. This is a different way of counting waves, which is very objective, and the MetaStock plugin does it all for you. So wave 1, 2, that's the earliest that you can get into a trend. That's the first retrace or the first cycle low in a new uptrend. So starting a new trend, so trend is on our side, number 1. 2, what about momentum? Is this a strong trend or a weak trend? Here's the momentum indicator, and it's angling up, it's pushing up. So therefore, yes, trend momentum is pushing up. Number 3, cycle low is the timing. Now with timing, this is the cycle indicator. It's a modified stochastic indicator, but this little pattern down here is key. This little pattern, it's called a mini divergence, and basically what it means is price has been going down, and there's a momentum shift here where this movement down is exhausted. And we're not measuring momentum over the long term, we're measuring momentum just in this little half cycle from that high to that low. When it shifts, that's when we're looking, it's a good time to buy. That will help prevent you from getting stopped out so often. That will be then, it has a very high probability of being the final cycle low. All right, we've got support of the 50 MA, that's the 50 simple moving average. Then we go over here to the higher time frame, step 5, I'm sorry. And on the higher time frame, I don't trade in the direction of trend. Trend is actually down here. On the higher time frame, trend is a lagging indicator, remember that? So I don't want to trade a lagging indicator on a 3 times slower chart. So I look for momentum. Momentum is a faster indication. Momentum here is up, therefore I can take the trade, confirms it on the higher time frame. I call this higher time frame the fractal energy. It's the same chart, it's the same market. It's just on a different scale. So 1, 2, 3, 4, 5, this is a 5 out of 5 trade, and therefore I can take it. And that's it. It's not, as Paris Hilton would say, rocket surgery. Okay. Now, let me give you something here that you guys can take and use right away. This is my favorite technique for pinpointing market highs and lows for entries and exits. All right, and this is about my cycle indicator. So let me show you, what we do is we take the stochastic indicator. As I said, it's a modified stochastic. And here's how we modify it. So you're welcome to write this down, take it, use it. So %K, we're going to modify it and change the time period to 5 and slowing to 2. That's a moving average. So we're taking K, which is the actual stochastic indicator, is the %K part of it, and lowering it down to 5 and then creating a moving average of 2. Then %D, which %D is a moving average of this, change that to 3. And the type of moving average is simple. Okay, write this down. You can use this on other charting platforms if you have it too, but of course, hopefully you're doing it on MetaStock. All right, now once you do this, this is going to give you a very powerful cycle indicator because the stochastic indicator actually is a momentum indicator. But when we change it to these parameters, it actually turns into a cycle indicator, helping you determine time to get in, that x-axis. All right, we're also going to create some horizontal lines on it. And those horizontal lines, you want to be at 20 and 80, and if you have the option, also put 50 in, because 50 is a key. But 20 and 80, you got to have for sure. All right. Now, let me show you how to use it. Now, we're not going to buy every cycle high. We're not going to short. We're not going to buy every cycle low or short every cycle high. You have to use it with the other energies. Like I said earlier, there's no one indicator that's a holy grail, and this isn't a holy grail either. This measures the energy of timing, but it must be used with the other energies. So we're only going to trade these cycle highs or lows in the direction of the trend and early in the trend. We're only going to trade cycle highs and lows that have momentum or strength behind them. We're only going to trade cycle highs or lows that have the fractal energy aligned, meaning momentum on the higher time frame. And here's the key. We're going to look for second chance indicator patterns. All right, what do I mean by second chance indicator patterns? I'm going to show it to you in a minute here. In fact, I already showed it to you on that slide, but I'll point it out real clearly. Second chance indicator patterns indicate a momentum shift at the top or the bottom of the cycle because the stochastic indicator is a momentum indicator. I'm going to show you the mini divergence. This is one of the second chance indicator patterns. There's 6 of them. And these 6 patterns show a high probability that you found the final low. So after you get in, the market doesn't go down and make a lower low. Or at the final high, so when you short, the market won't go up and make another higher high and stop you out. That's the key here. Okay, so here's what we want to avoid. Here's the stochastic indicator, right? Boom, 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 boom. All right, here we got a high, there we got a high. If you go short here, you would have gotten stopped out by a higher high. That's what we want to avoid. So here's how we do it. We look for these mini divergences. So here we've got a little bit of a lower low on price. And look at the stochastic indicator. By the way, K is the black line, D is the blue line on this chart. A little bit, a higher low, higher low. So higher low on stochastic, lower low on price. That's your mini divergence. Mini, right? They're real close together. We're not talking about big, divergences between long periods of time. No, just real close together here. That's a momentum shift. That means that within this little period of time, momentum has shifted to go up. And momentum, as I said, can lead price. So that's what's happening here. Even though price has still gone down a little bit, the strength has, to the downside, has come out, and the strength is now going up. And that is a potential leading indication that you found the final low here. Not here, but here. Look for these little mini divergences like that. then bam, you can take that. Okay, now here we have the trend's been down, but guess what? It's been going down for a long time. So if it's more than 5 waves down, we can start to look for trend reversal trades. Lower low on price, look there again, higher low on the stochastic indicator. What's that mean? It means price still has been going down, making a lower low on price, but not on strength, on weakness. So we're going to flip around the problem we've had where you've been trading and buying weakness, right? Well, now we're going to turn it around. So we're going to use that weakness to our advantage and say, you know what? When the market's going down, 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 and then we see this momentum shift where there's weakness going down, okay, we're going to buy that then. We're going to buy it. And boom, goes way up. You can use this during contraction periods. So you don't have to use it just with the trend. You don't have to use it just for reversals. Even when the market is in a contraction phase, you will see these. All right, so a little bit of a higher high on price, lower high on the stochastic. See the blue line there? And that's, again, a mini divergence. Not between cycle highs. That would be a regular divergence that's taught in all the books, right? That's stuff we all hear about. Now, just within those highs, within those lows. And that creates a scenario where very unlikely that the market's going to go out and make another higher high after you get in. You get in very early. See how early you're getting in there? Trend's not really even confirmed. I love these trades, by the way. I look for this on triangles and wedges and all this kind of stuff because they usually create pretty big moves after that. And that's usually before most people get in. All right, so I want to give Jeff some time here to finish up and talk about the plugin, but this is all I do. It's pretty simple. Obviously, I couldn't go into all the details here today. I only had a little under an hour, but we're just waiting for the 5 energies to put the odds on your side. And here's my trading method. It's pretty sophisticated, and it takes a whole sentence to outline. A trend, number 1. This is all I'm doing all day long. I day trade, swing trade, and invest, and I always use this 5 energy method. And all I do is number 1. Trend. Always do this in this order, by the way, mostly just to keep your mind orderly. So which side of the market do I want to be on? Then is that trend strong or weak? Got to have that on your radar. Always ask yourself, is this a strong trend or a weak trend? Then number 3, okay, let's say it's a strong trend, but when do I want to get in? When will I, on the timing axis, the x-axis, when can I get in where I won't get stopped out right away? When's going to be the final cycle low or the final cycle high before the market goes back in the direction of the trend? And we do that with these mini divergence patterns. Then you look for your support resistance levels, because that's the confluence of time and price, and then confirmed by the bigger scale. Look at the next higher time frame. I like a 3-to-1 ratio. And there, I'm not looking at a trend personally. I prefer to look at momentum on the higher time frame just because it's a faster indicator, and so it tightens up the correlation between the 2 time frames. So this method, very robust, very adaptable. I trade the same 5 energy method on stocks, commodities, options, currencies, and futures. I use it for day trading, investing, swing trading, right? Because these indicators, they will adapt to whatever time frame, whatever market you're trading. They're just showing you what the energy of that market and that time interval is. It's very simple. It's very objective. There's no guesswork, especially if you get the MetaStock plugin. It just, boom, puts it all out there for you. In fact, here's a little snapshot of the MetaStock plugin. And as you can see, it's got the commentary right there. So it will tell you. It'll bring up signals. And it'll say, well, okay, here's a wave 9 reversal going short. And that's right there. Basic setup. Well, we've got a wave 9, which is an extended trend. Here's your wave counting. See, 5 is average, 7's extended, 9 is really extended. So we like to take those really extended wave counts as reversals. Okay, percent D talks about that, been above 45, etc. And then here's your commentary. It tells you about it, the setup, how to confirm the setup. Where's your entry? Well, that makes it easy. Where's your stop? Tells you where to put your stop. where to put your targets. It's all right there. I mean, this is what I love about MetaStock. There's no other software that does this. MetaStock's the only one. So it's just boom, there you are. There's the information. Okay, no more guesswork. All right, so here's my email address. I'll see if I have I guess I have a few minutes for questions, and then I want to make sure Jeff gets his time in. But if you have any questions that I don't get to answer today, which I'm sure there will be, here's my email address, Barry@topdogtrading.com. Feel free to email me with any questions you have. I love hearing from traders, so don't be shy. Also, I do have a free gift for you all today. I had to go through this kind of fast today, and I'm fully aware of that. So I am going to give you one of my courses absolutely free. So this course is about how professionals trade differently than retailers. The difference between professional trading and retail trading, we talked a little bit about it, hit a few points, but obviously there's a lot more to it. That's what this course is all about. You want to be a professional, you gotta know how to trade professionally, obviously. So this little course, it's a little mini course. It's only 5 videos. Each video is about 20 minutes long, so you can go through it real fast, take it at your own pace. And in the fourth video, there is going to be a trade that I give you on that called the rubber band trade, and that's an actual trade setup, showing you where to get in, where to get out, what the setup is, what the charts look like. And that's a setup that I take every time it sets up to this day. It's a really, really great trade, and you're going to get that and with my blessing. Take it and make as much money as you can with it. That's on video number 4. So you can get that by just going to topdogtrading.net. Topdogtrading.com is my blog, but note that topdogtrading.net is where you can get access to this course. All right, and take it with my blessing and enjoy, absolutely free. And let's see, we got a lot of questions that have come in. Oh my gosh. Jeff, do I have time to answer some questions, or do you need to have this time for your...
I've been trying to answer some of them. But let's go ahead and answer 2. Pick your favorite 2.
My favorite 2. Okay, I haven't even looked at them yet, so let's see. All right, let's see. All right, let's see.
Did you write a book that explains your technique? Which one?
I did, yes. Wiley published my book called Trend Trading for Dummies, and part of this famous dummy series of books. So, yep, get that wherever better trading books are sold. Yeah, there's going to be a recording available. Yes, there is. MetaStock will be providing that.
Yep.
And
go ahead.
Oh.
I was just going to chime in. The videos, because we get this question a lot, but the videos will be available mid next week. We'll put them all up on YouTube, and I will personally email you when they're available.
Oh, here's a good one, and several people have asked this. So this is important because it really goes to the heart of what I shared today. So they're asking about the stochastic indicator. So it is the slow stochastic, Jay. Jay asked if it's the slow or the fast one. It's the slow stochastic. The settings I already gave. So we're not using the, there's a lot of different stochastic variations of stochastic momentum, double stochastic, fast, slow, all that kind of stuff. Thank you for asking that question. Great question. It's very important that, yes, you know that it's the slow stochastic. So thanks for asking that. Okay, so thank you to MetaStock. Thank you to Technical Analysis of Stocks and Commodities Magazine. Fantastic event here today. All great speakers. And thank you, everybody, for attending here today and for participating in my presentation. And Jeff, I'll turn it over to you.
Okay, thanks. I'm just going to show this real quick. Some questions that we had are the waves labeled, and you can see right here on your chart they're going to be labeled for you. We have the down and the uptrend, just basically showing you how we're doing the counts on them. One of the things that I like about this particular product is you also do have all the support and resistance, and the pivots actually automatically labeled and identified for you. You'll notice the red lines. These are drawn by the software. I didn't go in and draw these, but they're actually looking for those mini divergences that Barry was talking about, and they do the last like 15 or 20 of them. They just put them on the chart for you. You can see where they're setting up and forming. Anytime you have like a buy or a sell opportunity in the marketplace, that's going to be actually identified for you. It's going to give you the momentum counts in the commentary. Those come with an entry point, an initial stop, what your targets are going to look like in terms of where you should be looking to get out of that position. And because we wanted to provide a lot of detailed information about the different signals, there's a number of signals that are actually in there. You'll notice that all of the signals actually have this hyperlink at the bottom of it. And if you click on that, it's going to open up in your browser. In my case, I'm using Chrome, but it's actually going to tell you exactly what that pattern is. It's going to tell you kind of the things to look for to increase your probability of success on the chart, and give you any additional things that we thought were going to be helpful for you for that particular pattern and understanding that particular pattern. And that's really where I love MetaStock, and the ability to, take some of these really good experts and just kind of help you understand while you're learning the method how to implement it in the trade. Of course, it does incorporate scanning. It wouldn't be a MetaStock add-on if it doesn't, so you can, to answer your questions, yes, you can absolutely scan for the setups and the patterns and that kind of stuff. And when I do my boot camp, I'll actually very sit down and actually go through and show you exactly the process you'll go through with scanning, and how to build watch lists, and how to look at the experts, and how to manipulate them, and how to set up alerts on them, and that kind of stuff. So definitely, we always kind of get a little bit push for time on these particular events, but I will definitely set up and sit down with you and make sure you understand exactly not only how to use MetaStock, but how to get the most out of any of the add-ons that you want to buy. I love Barry's taking it to court, his 5-energy method that he uses, looking at trend, momentum, cycles, support and resistance, and scale. Those are all part of the add-on. They're all integrated into the add-on very well. And those energies are significant. They're all, you're not looking at 5 different moving averages, which is roughly identifying the same thing. They're not correlated with each other, and they're significant in every trade. So very, very good job with it. There are quite a few patterns that's available in this particular add-on. Here's just a list of them. You've got your patterns for a new trend. After a trend's kind of getting tired, it has reversals that it looks for you. And this is all kind of automated in the product. So there's a lot of stuff in there, but it kind of, with the commentary, it makes it really, really easy to understand what's going on the chart and evaluate it, and even what to do with it. So in any case, there's the indicators that are included. It's a very extensive add-on. I just won't have time to do it justice in the 0 minutes that I've got left, but it does have a 30-day money-back guarantee in it. It is part of our Summit special where you save $50 on it for buying one, and up to $100 on each of them if you buy more than 3 of them. And if you just buy any of them, if you just buy anything, you're also going to get included with that 2 years of stocks and commodities. And of course the boot camp that I'll be doing on Tuesday, May 3rd from 4 to 5 p.m. So, which is Mountain Time, that's 6 to 7 Eastern Time. So make sure if you're kind of interested, go ahead and get your order in so you can kind of come in. I'll teach you how to use it. We'll spend an hour, or if we need to, it'll be a little bit longer, and just make sure you understand how everything works. As part of it, I know there's been a lot of questions about MetaStock. One of the ones that I wanted to specifically address today is, does it come with data? It does come with data. We're strategic partners. We used to be owned by Reuters, but we're strategic partners with Reuters. We bought ourselves back, and it'll include data for anything you're interested in, whether that's North America, whether it's Europe, Middle East, and Africa, whether it's Asia Pacific, whether it's Forex, whether it's futures. Reuters has got the data, and it'll be included as part of that during your checkout process. So they'll actually ask you what data you want as part of that trial. So go up to the website, metastock.com/summit. Give us a call if you have questions that we're not answering, because we're just limited on time, 800-882-3040. And again, give it a shot if you like it. I hope it's as helpful for you as it is for me. Brief shout out to our sponsor, Stocks and Commodities. We really appreciate what you've done. It's great to subscribe to a magazine that delivers you trading ideas and trading methods every month. It's a great educational opportunity. And I hope you had a chance to sign up for the free copy. And again, if you buy any of the add-ons, you're going to get a 2-year subscription